All attendees are in listen-only mode.
A very good morning, everyone. Welcome to Admiral Markets. My name is Chris, and together we're going to take a look at the Forex market in this live webinar on strategy. Before we dive into the topic, though, be aware that this webinar is intended for a global audience and may not be suitable for everyone. Therefore, please take a look at admiralmarketsglobal.com and select your country of residence and contact an appropriate entity. Also, be aware that trading foreign exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Alrighty, take a look, if you like, after the webinar at admiralmarkets.com. The website has a lot to offer, like analytics, wave analysis, technical analysis, fundamental analysis, heat maps. Also, the potential there to look into the Supreme Edition. 56 features a lot of things like, for instance, an easy management tool, let's see, the correlation tool. So you got a lot of things there as a plugin that you can put on your MT4. And I'll show you in a second, otherwise it's a bit easier. But you can see alarm management. There's a lot of things, sentiment analysis that you can use, you could do with this Supreme Edition. It actually won an award for Admiral Markets. As you probably know, it won the best MT4 broker award because of this, or this, at least a big part of it, at least, right? Among other things. Alrighty, let's take a look today. I was thinking about taking a look at Fibonacci numbers and using them in combination with the tunnel. But before we dive into that topic, let's see, we got this calendar to look at. We had interest rate decision on yen, which obviously didn't move. Nothing big, I see. Some medium news on the pound. Let's take a look at the heat map. Wow, look at that. Look at the Kiwi. Kiwi number one, that doesn't happen too often. Pound is second mover, which is quite normal. Euro the third. The least obviously Swissy, which is also not uncommon. So typical kind of volatility range, I would say. Big movers here are Pound New Zealand, Euro New Zealand. Very big compared to the others. Kiwi dollar moved a lot to the upside. Dollar Swissy and AUD New Zealand to the downside. You see, the higher it is, the more it moved, and the more to the right, the more basically range or volatility we've seen. So, you know, obviously Pound New Zealand here, a lot of volatility and moved a lot to the downside. New Zealand dollar moved a lot to the upside, but not a lot of volatility. Not as much, well, decent amount, but not as much as Pound New Zealand. That's how you can read this this table. So that's pretty interesting. All right, let's take a look at the charts. So yesterday was, you know, looking at pound dollar upside and the potential for a bounce. Did anyone trade that by any chance? I was looking for a hook back here, actually the fifth to sixth candle to be precise. And well, we had 1, 2, 3, 4, 5, 6 candle was bullish. That could have been the entry, or obviously that candle was right at this resistance line. So, you know, an entry just above that candle high and the trend line would have made also a lot of sense. Did anyone trade that? We were looking, I was looking at least for a bounce to the upside off of this this bottom here, right? We got a substantial rally, in fact. Not only that, we went all the way up to 152.50, which was the intermediate target I was talking about, right? Because I said between 152, 152.50, we'll probably see intra-week resistance as we reach, there was something that we reached there, I don't know. I thought it was 152. I think I said 152.20-ish probably. Maybe you remember, but we have this resistance trend line now, which is certainly a resistance spot. Obviously, yesterday we had this top in play. So yeah, that was a good target to get out here because there was a lot of resistance at that 152.25. Now, if we look at the Fibonacci sequence levels that I use, you can see that price passed, kind of went to the third level. And when I look at sequence levels, the best levels are when price gets past the third, up to the fourth or fifth. Now, how do you count them? It's pretty easy. What I use at the first sequence level, if you just look at the Fibonacci sequence levels, obviously it starts with 0, then goes to 1, then to 2, then to 3, then to 5, then to 8. But I don't use it because it's too low of a numbers. I start with 13. That's the first level. The second level is 21, and then the third level is 34. So anything that goes beyond 34 pips on a smaller time frame, like the 15-minute chart, is where I expect acceleration up to 55 or 89, which is the fourth or fifth level, right? So it's very simple: 1, 2, 3, 4, 5. The first level is 13 pips, the second is 21, the third is 34, the fourth is 55, and the fifth is 89 pips. Does everyone understand that basically these 89 pips are measured from the very bottom here, which is a magenta line? It's just basically the pips measured from the bottom up to this moment, this fifth line. Is everyone clear on that? Just in case maybe you're joining for the first time, I don't know, or the second time, or you've never seen this script by any chance. Is this clear that what these numbers represent, these lines represent? Okay, the pip numbers are here. I wrote them. They're not visible on the lines, unfortunately. I wish I would have thought about that. It's something I developed myself. Well, I didn't do it. I asked someone to do it, or I hired someone to do it. And I didn't think about putting the numbers there. But if you scroll over it, you'll see it. I mean, it's something you can do yourself easily too, if you just keep 34 in mind and put a horizontal line there as well. It's possible too. But I don't see much confirmation about it. Ella is kind of unsure. BT doesn't see these pip numbers. So once again, is this clear, or should I'll explain it again otherwise? Let's see. All right. Basically, you take a top or bottom, all right, and or anything that's close to this tunnel. Well, I'll leave that for later, that explanation, okay? That's something I'll dive into later. But normally speaking, let's for the moment, let's just assume a top or bottom. This is a bottom. So if you start counting from that bottom, typically what you witness in the market is that you get the biggest acceleration once price passes the third level. On a lower than a 1 hour time frame, the third level is 34 pips. So once you pass 34 pips, you get a bigger acceleration. What I typically use here is 3 levels, or these levels basically, to indicate that the first level is 13 pips. So the distance between the first purple line and the magenta line is 13 pips. The second level indicates the next Fibonacci sequence level, which is 21. And then the next one is 34. So the third purple line from the pink line represents 34 pips distance. The fourth represents 55. The fifth represents 89. Is that clear? Is the principle clear? Okay. Good. So these 5 lines represent those Fibonacci sequence numbers, right? It gets interesting when price starts to break above the third, because that's typically when you would see an acceleration. Now, this is what I use on the 15, 30, 5-minute chart. But an hourly chart, I don't use 13, I don't use 21, I don't use 34. I start with 55. 55 is the first one. 55 on an hourly or higher is the equivalent of 13 on this chart. All right? But that's on a higher time frame. So yesterday, I was looking already for long somewhere in here at support. But when price kind of poked through the third and hooked back to the second and started to rebound, there was that chance to trade it from the second or third up to the fifth, and that was a good breakout, right? So that was a very nice upside yesterday. Actually, the same happened with the euro dollar. Euro dollar, if you take this bottom into account, poked through the third, hooked back, and again here too from the third up to the fifth. That's where the intraday upside was. Aussie had the same, in fact. Depending on where you take it, if you take it from this bottom, it had a trade on the 5th of October from the 3rd. Oh, this is the 4th, actually. Sorry. Well, anyhow, I had it from here, the breakout from 3 to 4, and then from 4 to 5, and then even from 4 to 6. Or if you take the most recent tunnel hit, which is here, the tunnel is just my abbreviation that is used for this, the long-term moving averages 144 and 169 EMA closed. If you take this as a reset moment, then there was indeed also the break above 3 here, the hook back to the third level, and again up to the fifth. The same pattern, in fact. So typically I would take bottoms or tops, but I also sometimes use the starting spot at the tunnel. Why? Because it's a reset moment. As soon as price gets back to this long-term moving average, it's where I reset the count of the pips, counting the sequence. That's why at first I had it here, right? But then we made a move up and we went back to the tunnel, which means I reset it here. Then we went back to the tunnel, which means I reset it here. So first I had it here, then I had it here, then I have it here, and that's where it still is. Why? Because it hasn't gone back to the tunnel. As soon as it goes back to the tunnel, I can move it back. I can move it up to wherever it stops at the tunnel or below it. And that would be the new count. And then again, the third level will be important, because if it doesn't break the third level, it's in a range. And if it doesn't break the third level, it could even reverse, go through the tunnel back down. All right, I hope you follow me. If not, let me know. At the moment, therefore, this is the level. And what level are we now at? Well, yesterday we had a trade from 3 to 5, but now it's actually accelerating away from 5 up to 6. Now, when we get into a level like 6, it's already pretty far. Why? Because it hasn't touched the tunnel for a decent amount of pips. So when it gets to 6 or 7, the chances of it going back to the tunnel before perhaps continuing or maybe reversing is just increasing, which means that it has already gone pretty far, and the potential to make trades to the upside is diminishing if you get to a level 6 on the Aussie. Maybe on the pound yen or euro yen, because of its volatility, because of its big movements, level 6 is not that far, but it could be maybe a 7. So the naming, it's just very, if you see the pink line, right? The pink line is the starting moment, that's the base. And then you count every purple line after that, you add just one number. So 1, 2, 3, 4, 5, 6. Now, personally, I had a bit of doubts with the Aussie because I thought it was running into resistance. So I didn't trade it. I didn't trade the euro dollar because it was in the range. But the pound dollar, yes. And I traded the dollar yen yesterday. And yeah, but in fact, all three, the euro, Aussie, and pound, made kind of the similar move from the 3rd to the 5th. So a very useful, I think, tool to see where that space is. So now we're running into the 6th on the Aussie, which doesn't leave us much space. The euro is getting closer to the tunnel, which means as soon as it hits it, I can reset that level. The pound is somewhere hanging between the 5th and the 6th. Obviously, if it's up that high, the best really is from 3 to 5 and up to 6, and try to manage it up to 6. I mean, if you're hanging in between 5 and 6, it would be better if it goes back to 4. It will hit the tunnel. That's okay, and then bounce back to 6 probably. We'll have to reset it anyhow in that case. At this point, sometimes there is a trade from 5 to 6, but it really depends. I wouldn't say at this point that's a good trade, just because we have a resistance trend line right here. It's possible, probably if it gets back to 5, which is here, if it hooks back, maybe there could be a trade up to 6. It's possible. It wouldn't be maybe that bad, but definitely a bit of retracement would be good, because we're in a resistance trend line and then we're hitting 6. So there's pretty sturdy levels above us at the moment. If we get a pullback, things change, it looks a bit better. Ultimately, now price could be into potential breakout spot if we put a fib from here to here. Let me get rid of these lines. Now that we're above the 23.6 fib, we could go up to the 38.2 fib. And maybe even the 50, right? So there is potential for that upside. So I do think that from a swing perspective, from an inter-week perspective, that we could see upside, but maybe a bit of a pullback before we get the follow through seems a better deal in a way. We're always looking for bargains. We're always kind of like looking for discounts in a way, right? And just like true shoppers, and we're shopping around for probably a better price than what is now available at 152.50 for upside. I think that upside looks good, but I would rather see it go back here, or at least here, up to that next fib level at 153. What is it? 20? 153. I think 20. Let me adjust this fib. And 153.80. All right. So that's how you can use these fib sequences to identify intraday, but also swing trades and the zones that are most interesting. If we use the same tool on a 4-hour chart, then we would do it differently. We would use this bottom. All right, let's take a look where those levels are. We see 1, 2, we're at the 3rd level right now. What does that mean? Well, that means that we're still in a range environment. We're still actually consolidating in a retracement phase. As soon as we can break above 3, then we're getting a more interesting zone up to 4, which is equal roughly to the 38.2 fib. Now, typically, what you can see here when you hit a 3rd level on a 50-minute chart is you get a pullback after the 3rd down to the 2nd, or if you push through the 3rd, but you often then just miss the 4th. What you can see is maybe push through the 3rd, then hook back to the 3rd or the 2nd and go up to the 4th. That particular hook back is probably the most interesting. So, we are in an interesting spot from the 4-hour chart. We're at the 3rd, and once you break the 3rd, there could be that push to the 4th. Now, the dollar yen, good morning, Caitlin. Good to see you. We're talking about the Fibonacci sequence levels here in combination with the tunnel. Let's see. Let me, 1 second. Let me get rid of these moving averages so that we only take a look at the tunnel. One second. Let me save this quickly. Alrighty. All right, so dollar yen. Okay, we had a hit of the tunnel here, which means that first of all we can put it on the upside here. All right, that's a renewed reset level because we hit the tunnel. So and it's a top two, so obviously that would be a level. So where do we see? We're still seeing that we're at the very beginning of a potential downside or correction, and we need to get below 3, down to 4, down to 5. Those are the more interesting zones here for a bearish breakout. Now, an hourly chart, that could be 15-minute chart, that could be a bit different. Let's take a look. 15. 15, I would use this top because that's the closest to the tunnel. You could use even this top. You'll get 2 levels. That's okay. That's how, that would be the spot that I would choose yesterday. If you do that, you see that you kind of poked through the third here, right? That's already an indication, there is already a decent chance that when you get a pullback, you get that follow through. Now, what I was actually looking for that short, and I took it somewhere when it was made the top here and started to fall in here somewhere. Now, I didn't go out too far before we got consolidation. It really only fell later today. I didn't hang on to that, and I exited for break even. And I didn't live through all that choppiness. I unfortunately didn't see the break here happening, and it only happened way later. But in any case, despite the choppiness, it did push through the third, hope back to the first. It was a pretty deep pullback, and then made the fall from to the fourth level. I don't know how much it missed the fifth, just by a bit. All right, so that would be the original spot. If we use now the newest hit after, closest to the tunnel, we can see that we're right at the third as we speak. No, this is the fourth already. Sorry, this is the fourth one already. Yeah. So the next one could be this fifth. All right, so from that point of view, I think it looks bearish. It actually hooked back already to the second. The bands, I have them on, but I took them off just not to confuse too many things at the same time, so that the focus is on you don't get distracted. I would typically have them on. I'm just wondering about basically this particular move. Let me put on the same sequence levels, but from this top. You see, if we compare that to the pound, this retracement was a lot milder, I think. Let me take a look again. That was a pretty sturdy upside bar, and it's still within that price action here. But that's something maybe that's a bit iffy. I don't know. if maybe if it breaks one more time, if it would break through this level, could be worth it maybe. Let's see what that could be. Below 111.90 maybe. Could be a good breakout down to 119.60. It will be more a scalping trade. We are looking at a small time frame, but it could accelerate down to, that's the fourth level. I think the fifth level is probably a bit better. Let's see, that would be 119.30-ish for about 60 potential, I would say. Probably a bit better than now. I mean, I don't like this particular bar. If that bar, maybe the low of that bar would break at least. Looks maybe a bit better. All right, so that's the dollar yen. Let's see, pound needs a pullback, Aussie needs a pullback, euro dollar is pulling back, hit the tunnel. So this kind of level is not valid anymore. So there are two things I can do. Is one, I can use this as a top, see how far it can go to the downside. First of all, and it's hit level 4 in the meantime, the retracement. So probably will bounce. Now, if it breaks that, it could go down to level 5 as a reversal. If it does something like this. All right, that would be the downside scenario. Also, of course, I can use that same Fibonacci sequence levels. Once we get the bottom here and it does something like this, I can move that sequence level up to here and then turn it around for that. And I can see the breakout to the upside. And the breakout to the upside would happen as soon as price is able to break above the third as well, right? So it would probably kind of make a triangle here. Depending on the break, it would have space to that fifth level here, and then probably to the fourth or fifth level to the upside. All right, so that's how I would use this tool to my advantage. Now that's just, of course, one thing I used. I mean, I do look at higher time frames. I do look at confluences and fibs and the band moving averages to basically make an overall judgment of if any of these, to try making kind of a summary and see which currency pair and time frame have the best odds. But this is one of the things I do use. It's just not necessarily the only thing that I would consider when taking a trade, but it's certainly one of those things. All right, so that's anyhow what our focus for today, or my focus for today is using this. So that's why I'm emphasizing, of course, this method. Now, so basically, as soon as it hits you can use any top or bottom, or as soon as it hits, the tunnel, use that as a reset zone. And daily chart, these levels are good for hourly and 4 hour. For an hourly, once again, the third level is 144 pips. All right. The third level is 144. Okay. It doesn't change for the daily, but for the daily, I would recommend personally to use, let's see, 1 second. I would start with the key level, I would say, is 233 on the daily. No, that's the first level, sorry. Like the 55, okay, so the key level for the daily. So key level for the 50-minute chart is 34. For a 1 hour or 4 hour chart is 144, I think, right? 50-minute chart, 60-minute chart, and or 40. And this is daily. I would say it would have to be 377. It would be 610. That's the key level. Oh, sorry. 610 for the daily. Once it breaks 610, you will typically see bigger accelerations to 977, 1500. We can take a look at an example. I don't think many of us want to use it for daily, but let's take a look at a quick example here. Let's see, we have to look at 233 is the first level. So this is 1, 2. So here's the third, all right, for the daily. Went down to the fourth, down to the fifth. Oh, we don't even have the sixth here because I didn't go that far. Okay. So anyhow, probably after that, what would be after 6 here? That would be 2,600. It would be an extra 970 pips. Did it move that distance? Certainly did. Certainly did, didn't it? So I would have reached the sixth somewhere in here. And then I went back to the tunnel after reaching 6, which is not surprising, right? So we could use it for the upside too. Let's take a look, right? The reversal, how far did it get? Once again, we need to find 144 as the first level. No, 233 is the first level, sorry. 1, 2, 3. And it made the upside break to 4. Kind of poked above it. Interesting. Well, I don't know. Seems very consolidated. I don't think it will get up to 5, but who knows? If it does, we know what the target could be. If it breaks perhaps above this fifth level, maybe. Who knows? Wouldn't expect it, but you never know. If it does, then if it does break above this level, perhaps it can make that. It went from 3 to 4. And the third level is kind of the consolidation level. All right. That's a daily, but that's something that doesn't happen that often. The other way, of course, can be done too. We can use this top now for downside because we hit the tunnel. And what do we have? Once again, we need to start at 233, which is the first level. This is the second, and we stopped at no. Did we stop at the third? 1 second. Yes, we did. 1, 2, 3. Stopped at the third. So when could we expect the bigger, breakthrough? When we pass 3. So what is the third? Right here, this bottom, this key bottom. So once we pass the third, we could expect some acceleration, probably down to the fourth. If we break the fourth, then down to the fifth. So key level, this bottom, this top. I'm just looking at this tool, using this tool, this top too, of course. I would still say also this bottom, by the way. And then ultimately, of course, this bottom too. But yeah, those are the zones. Now we're just stuck in that. There's a small level in here, perhaps, but we're kind of consolidating for quite a while in the meantime. Look at all these days here. So it's pretty simple. It's just sequence levels, but they give it kind of an extra, maybe extra confidence, extra target, extra kind of reasoning to see targets, to see spaces and stuff, and maybe see bigger swings, etc. Let's see. Beverly is talking about yesterday's long. Great job. I took the long too. I exited earlier than you. I'm already out at this resistance spot, but it's breaking through. And this morning I was saying that I would like to see a pullback before taking a long, but doesn't look like it wants to give me that. I was a bit too optimistic that it would, but let me put the sequence level on a 50-minute chart from here. And here you can see, I was actually showing Beverly, the viewers, that on the Euro-dollar, AUD and the pound, all of them broke a bit above the third, hooked back to the second or third, and made the move to the fifth. was pretty nice on all three pairs. The pound did the same. So if we're now above the fifth, the sixth would be the target in my opinion. At about, well, even now I would be already a bit, so that was just a trend line. But as long as price action stays bullish, I think you can hang in there. I would be, well, definitely I would not aim more than this 38.25. That's the very max I would aim for, personally. And it could turn before that any moment. So personally, if I were you, I would now start trailing it pretty tightly. Because I don't think you want to live through a pullback that deep before moving up again. And who knows if it does move up again. I do think yes, I would be interested in finding longs at the tunnel, right? But who knows? We might get a small bounce and maybe another move like that. You never know. Protect your profit, as Nana says as well. So I wouldn't want, probably in your case, to live through such a deep pullback and the potential for maybe continuing. I would now use a tighter one. I don't know exactly where. Let's dive into maybe a lower time frame. Let's see. Probably at least below this hourly candle. This hourly candle low. This is a strong candle. If that all of a sudden, it's not closed yet, but still, I would still use the low. I think it's okay. Or this bottom. The previous candle is fine too. And then once this candle closes, move it below this low. That's already pretty tight, I think. I mean, if you really want to go tight, you can even go 15-minute candle low. As soon as this 15-minute candle closes, go right below. Just trail those lows. If you really get even closer, the closer I get, the more I zoom in. So if it really gets up to even the 75 to 153 level, 5-minute chart perhaps even. Okay, great. Nice job on hanging in. I didn't have that patience. And I expected a bit bigger pullback from this resistance zone, but doesn't look like we're getting it. From a wave perspective, let me see. I think I was expecting a wave 5, and I was thinking that the wave 5 is almost finished. You see here, 5. Oh. The 61.8 target is at 152.90. So yeah. Anyhow, then again, it's nothing to be that sad about, because really, in a way, a wave 5, halfway a wave 5 is not the best place to start looking. I mean, it's possible, but it's not the most best place ever to start looking for trades. So with that said, let's take a look at something else. Yeah, Kiwi, I was also looking for long, but it didn't happen when I was looking for trades. And eventually I stopped monitoring the charts, and then we got this big move, up move. I was actually looking for it as a bull flag indeed, but stopped monitoring it. It did indeed turn out to be a bull flag like this. And if you use this 1 hour bottom, because that's the closest bottom near the tunnel, then we were at 1, 2, 3, 4, and because, I mean, typically you would expect to pull back to 3 or 2, if it's very deep to 1, right? More 3 or 2, I would say. But because it's making a bull flag, that bull flag break was good, because we know that we had space up to 5. And if it doesn't pull back to 3 or 2, but makes it a chart pattern like that, it's still a good trade. So the Kiwi upside was a good one too, but here too the same problem, that we're getting up to the 5 level. That trade is actually behind us at the moment, and we're filling kind of the space between the band and the tunnel right now. So let's see if anything else is going on. Dollar CAD made a small retracement, but by far not as much as I expected. I didn't trade it though. there is divergence now, a second divergence, so maybe eventually there will be a higher chance that we'll get back to the tunnel. I don't know, still looking, let's see if there's something else. You can use the sequence levels here, but it will be pretty obvious what it tells you. Why? That it's not really in a range trending environment, right? 1, 2, 3. It's in a range. If it could break 3, probably what I'd rather see is let it move to 4, back to 3, and then trade it from 3 to 5. That could be a trade that seems pretty properly set up at this moment because we got the band above the tunnel. All right. Euro odd, also a trade I was looking for downside, but also one that happened during my nights, and I don't trade at 2 a.m. my time, unfortunately. I was looking for downside on Euro odd and pound odd. Remember yesterday that I was talking about it. And I did trade, did I trade? No. Yeah, the Euro odd, I did. Sorry, I did actually. But I got out for minus 2 pips, I think. Yeah. Now the reason was I took it actually here. And I took it off because it took too long for it to move down. We got this hourly candle. And I was really scared for a zigzag. And I have my stop loss just above here. And indeed, price actually went up to a place where I would have exited for a loss. So it was good I exited that one. Because I was scared for that zigzag. And yeah, it took a lot longer before we are now breaking down. So that was one that unfortunately passed. Yeah, huge loss. Luckily not indeed. But we were looking for downside. There was, yesterday we did the analysis. There was a good trend on the euro, especially the pound up, but the euro too was also looking good for downside. It is happening now. So if you were trading the aging session, maybe you were able to take that trade. It is developing as expected. The pound out didn't get as deep perhaps as I was hoping for. But we have to realize that if it doesn't make that deeper retracement, that it's always good to keep an eye on fractals, for instance, because when those break, then on average, you're going to get a good follow through. And the 8 EMA really, staying bearish despite, or flat, despite this correction, in fact. So yeah, it was a nice, this looked more like a bear flag, less than a zigzag. I think the difference between the euro odd and pound odd is that it had a pretty strong candle here. Especially this candle was pretty strong. Whereas the pound odd, had maybe a okayish candle here, but that top got broken. And ultimately more looked like this relatively to this fall. All right, so looked a bit better as a bear flag. But these, yeah, I'm not in these trades, unfortunately. But they look nice. Anyhow, at this moment, let's see. If you're looking for good setups, then you can see that the pound odd certainly is everything is aligned, isn't it? Look, price, 8 EMA, 21, the tunnel, and we're getting down to the 6th level. So Now, big movers, pound odd, I would say, is a relatively big mover. So you never know. You could get acceleration all down to 7, but 6 is probably still a bouncing spot. So from 6, after it hits 6, I would like it to go to 5, and then that could be a turning spot down to 7. On a pound odd, that's a bit more likely than, for instance, odd USD. So unfortunately, we're kind of in the situations that where price has broken and continued. Yesterday, we were looking at a situation. I don't think I used this tool yesterday, where 1, 2, 3, 4, 5th got broken here. This was the hook back to 5, and now we should be set on going down to 6, roughly speaking. Pound, yeah, from that point of view, seems close to set up. Your dollar could be closer to a setup because it's back to the tunnel, right? So that offers potential. Dollar yen could be closer, right? With the breakout here. And also pound, dollar yen, maybe the pound yen. But Kiwi, the Aussie, the pound, the dollar, CAD, the euro odd, pound odd, they've moved a lot and don't seem, they seem that we would need a bigger pullback before tradable. All right, the New Zealand's moved a lot too, but they're probably a lot further than I would like to have them. Let's see. Already 1, 2, 3, 4, 5, 6, 7:30. Wow. And that's, I mean, of course, we're looking now at the biggest mover in the Forex market, the pound New Zealand at the moment. As I said, on a big movers, level 7 is possible. And not only is it possible in this case, it not only hit 7, went below 7, is moving down to 8, which is really a pretty massive movement. But yeah, some of these crosses that really move a lot and have maybe exceptional volatility at that point as well can even go out down to 8th, which is very far. We're talking about a movement really of 1,500 pips, amazing, on a 1-hour chart since hitting the tunnel. It's very exceptional. I mean, impressive. So if you then kind of zoom into where it all started for the fun, because we're looking at this tool, it was 1, 2, 3. You see that when it broke the 3rd, went down to 4. No, wait, I'm using this as the starting spot. Sorry. Okay, recount. This is 4. Look back to 2. Yeah, it doesn't stop it all the time at these levels exactly, but roughly went down to 5, then down to 6 at least, let's say. Hook back to 5, and went down to 7. Now, this is not always a standard pattern, that it always has to go from 6 to 5, no, but you could expect when it hits 4 to go to 3 or 2, as I said. You could expect if it hits, what is this, 1, 2, 3, 4, 5, 6, that it goes to 5 or 4, right, roughly. All right. Do you have any questions, perhaps? Do you have any currency pair in mind right now that you would like to take a look at? Maybe there's a particular cross that you would want to see. Just looking at some other charts like gold, silver, DAX, oil. All right. So let me use a gold and oil. We can take that, and we can take a look at gold and oil a bit better, sure. And we can take a look at odd yen. All right. Okay, I will move the microphone a bit closer. Is this a bit better? Okay, cool. That's good. Maybe I was just a bit too far as possible. It's good that you let me know already. So, well, maybe it depends from person to person too, but let's try this. Alrighty. So gold weekly chart here. Let's take a look back to the monthly tunnel. Back to the daily tunnel. Being squeezed into two tunnels. Monthly tunnel support, daily tunnel resistance. Well, I think we can make it pretty much simple. This support line, I think you had probably in your vision too, and we could probably, this resistance line has been broken, but if we make the angle slightly shallower, something like this perhaps, we can see that we're at resistance as well. So with a tunnel right above us. So from that point of view, it could provide a bit of a bounce at this resistance for and move back in this triangle to the bottom of that triangle perhaps. Now, of course, it could always break to the upside. You never know if it will hold a triangle like that, but that seems the most logical potential at this moment if it's that close to resistance. This top. So I don't trade oil, but I mean gold. But if I would, this is how I would analyze it. You got divergence one time on the hourly. Got this trend line going on. Looks like a bit of a rising wedge. Maybe slight, I don't know. Not much, but slightly. And probably on a 15-minute chart has double divergence in the meantime. Yep. So it could still bounce the 15-minute tunnel, perhaps. But I would expect, a break and move down at this moment. Something like this, probably. So if you use the sequence level here on a 15-minute chart, that doesn't really work that well. I never used it actually, but no, it would have to be, that doesn't make sense. Okay, well, yeah. Then, but still, as soon as we get through the 15-minute tunnel, I think we could have a bigger move down. I would expect something like this. Now, of course, this channel could hold. You never know. It could still provide a bounce, make one more top here, and then move down. That's always a bit difficult with reversal. So from that point of view, if this channel breaks, there could be a bit more confirmation there. Alrighty, let's see, oil. Got a huge monthly candle effect. Bullish candle here, bit of a pin bar. Yeah, you would expect it to go up to 53, 57 if these targets, I would say. So we got the big consolidation break with those targets in mind. Let me put a sequence level on this one. 4-hour chart here. Probably doesn't work either with this oil. Nah, it doesn't really represent what I wanted. But okay, let's go down to the hourly. Well, it looks like a bullish break of a pennant with some space to targets. Question is maybe more where I would want to trade if I traded oil, which I don't, but maybe retracement of that daily candle would be nice. I'm not sure if we'll get it, but 38.2 fib, 23.6 fib for a move up to the minus 1000 and minus 272 target, confluence at 53. So that's what I would be thinking if I see this. Let's see if we get the poke. You never know. Let's take a look at the 15. Maybe we'll just continue. There is a bit of divergence though. And if there is divergence, it should go back to the tunnel, which is equal to 38.2 fib. So yeah, I think that's a decent chance, but you never know. Of course, 100%. But that's what I would count on or analyze. All right, the odd yen. Let's take a look. All right, let's start with the daily chart. Oh. Now, daily chart, we of course have to start with 233, no, 144. And the 610 is the, no, we start with 233, sorry. 610 is the third level. All right, so it stopped at 3, poked a bit below it, went up to 2, went down to 4. Where is it now in relation to 5? Missed the 5th a bit. Maybe that's a sign of weakness. I don't know. It didn't get quite to the target, although it was looking like it would. Missed a little bit. All right, so that target could still be open, perhaps. If there's a reason to see a turnaround here, I would wait for some confirmation, but it could still make that fall. That's one potential there. The other could be perhaps a move back to the third and the tunnel. So let me switch that around and zoom in probably to the 4-hour chart and see if we can get a move up to here. All right. we know that a break of this could lead to the fall down to the fifth. On the 4-hour chart here, we should use, let's see, yeah, it's correct. We're at 4, moving up to 5. This is looking more bullish, isn't it? I wouldn't be surprised to see a bit of retracement. And then if we bounce here at the third, we'll have to move this sequence level to this bottom. As soon as we break above the third level, there could be that breakout trade from the third up to that level right there. That zone seems to be sweet. So we'd have to require a pullback, push up, consolidation, and then a break, something like that. Alternatively, an early break to the downside could be if it pushes through like that. So at this moment, I don't see any trades. Sorry about that. Maybe on the hourly it's different. The only trade maybe I could see is that fact that it is pushing through the tunnel and probably needs to pull back a bit. So eventually we'll probably get that pullback. Here or at 5, down to 4, 3. It would have to be a reversal probably. It's the only thing I would see. Nothing else. So that's basically, yeah, I think, is most of the angles I can think about when using this tool. And kind of gives an idea about when a retracement or range should be roughly over and when we get into more impulsive kind of zones on the chart, either intraday or from a swing perspective, or even daily. And just gives kind of an extra target, extra confluence for finding moments where maybe price has a higher chance of accelerating, therefore having a bit more patience with hanging into a higher target, with not taking profit too soon. And ultimately, that's very important for increasing your equity curve. Obviously, a few of those trades that go for a bigger length really help a lot. And letting those winners run is very important, at least occasionally. I don't want to be too ambitious in saying that necessarily we can get a big run every second trade, but if we have them occasionally at least, it really helps a lot. And I think that this tool, or this idea really, you can use it, you can use your own horizontal levels very easily. Helps with catching, kind of understanding where on the chart there could be those moments where price has a higher chance of making a bigger move. And that, of course, gives us a bit more patience to hang in for such a big move. So that's really the philosophy behind it. And yeah, basically the idea is that the tunnel is kind of the gravity point, in the sense that price will revert back to it at some point. And the longer kind of at the beginning, it stays close to it, right? When it's within the third levels. Let me put it on the chart in a second. The idea is that, or let me use the hourly. I think the tool is a bit better for the hourly. I have sometimes a feeling that the 4 hour it's okay, but you'll often break the third pretty fast. You might, for the 4-hour, even want to skip the first one and start counting on the 4-hour from here, 1, 2, 3. In fact, like this, and not count the first one, but okay. Oh, wait, it's already there, sorry. Okay, so the idea is that if it stays within the first 3, it's more of a range, retracement, and consolidation. And if it starts to break above that third or below that third, you're getting into a zone where price can move a bit quicker. And something like this, where it goes just past the third a bit, or maybe even halfway or down to the fourth, and it hooks back, and then this is a pretty sturdy hook back down to 1, up to 1. But anyhow, that's the idea, that you can see the zone where you get more follow through. The idea is that if price is basically hanging around that average, it's in that range, right? If it's hanging around that level. If it breaks it past the third on either side, there's that bigger chance that you get a sustainable kind of breakout, right? That's the idea. So you have the long-term moving average, and price is kind of oscillating around that. And then you have those third levels on the downside and the upside. And as soon as it breaks below it or above it, then you have more chances of a continuation to the upside, up to 4, up to 5, up to 6, down to 4, down to 5, down to 6, even 7 or 8 perhaps, as you can see sometimes. But eventually, when you get down or up, to those higher levels, there's the higher chance that eventually we'll get back to that tunnel, the long-term moving average. So that's the whole idea. This New Zealand yen, let's take a look for the fun of it. Let's see. It's like the New Zealand dollar, in fact, hit the fourth too, showed a bull flag and continuing. And here you can see it's just it's a big range. So here we have 1, 2, 3, right? So it stays within the third level, and then there is that breakout to 4. Doesn't have to go to 5, of course. In this case, it didn't. It's a bigger range. Here's again the bottom, and if you're in a consolidation like that, sometimes you don't avoid the fourth. You do have sometimes breakouts between 3 and 4. And here you have a lot of 3 and 4 levels, right? This is going sideways. All right. So, I mean, that's, I think, it. Any questions? I mean, does it make sense? Do you think it's something that will help you, or maybe not so much? Now at the moment we have a lot of situations where it's going to 5, going to 6, going to 8. Maybe the euro dollar is the exception there. Dollar yen has not broken this, as you see. It's good to wait for that break, I think. Okay, cool. Good to hear that. So, yeah, it's one way of how I look at the charts is this tunnel. First of all, the tunnel plus this Fibonacci sequence, And then if we add the band, right, what I may also look at often, you get a bit more, again, a different parameter that's added, which, all these things could be actually used in their own right, but I combined them. And it would give us some information about, for instance, how impulsive the move is. Let's, for instance, do that on the pound USD. Oh, 1 second. For instance, here, if we then still use the same sequence level, all right, what do we see? Well, we see that, and that sometimes can be confusing when you see this all intertwined. But if you, look on the sequence level, we see 1, 2, 3. And the third it did push a bit through. Sometimes if it stays at 3, it's a bit doubtful, right? If a trade from 2 should be taken up to 4 because it didn't break 3. Here it broke a bit. I do like a break a bit above 3 a bit more, but okay. And but you can see that at 2, we're kind of pausing at the band, right? You can use the band in various ways as to indicate whether price is using that as support and how far is price really moving away from that band. Here you can see my rule as a rule of thumb is when 5 to 10 candles are not touching that band, there's a good chance it will become support or resistance. So I exited that trade already yesterday during the day, but Beverly did a very smart thing, because if you look at the number of candles that didn't touch this band on this chart, we're really running into a high number. And indeed, it was used as support and a fifth level, in a way, giving confidence there for what now seems to be reached the target of the sixth level. Now, it doesn't have to stop exactly there, by the way, but these are general zones, but it made that move from 5 to 6. And all I want to explain in this case is just the role of the band, how here the tunnel was important, more important probably than the band. But once we got the momentum, the band started to become more important, because we had a very big move there. Why? Because many candles did not touch the band here, right? So when that many candles didn't touch this band, it became support and moved up for one more upside. From an edit waves perspective, that's why I said I had in the today's wave article that this is a wave 1, 2, this is a 3, and this is a 4, and we're up for 5. Now I didn't know how far 5 would go. I had some targets on the chart, flip targets. This was the main target, but it could have stopped here too, as well. It doesn't have to go up to what is it, 6? This is the 1, 2, 3, 4. Yeah, this is the 6th level. There's no guarantee in that. These are not like magical levels that price always goes to. So it could have stopped here, but it didn't, and actually from here still continued higher. I didn't, as I said, find that trade good enough personally, but it did move up. So anyhow, that's the role of the band. It can indicate if price is in a range, if there's support or resistance, if there's a lot of momentum. Let me see if we get one more example. All right. 1, 2, 3, 4. Hook back to 3, and the interesting here is that roughly still acting as support. Now sometimes I use 34 as well, more in the past than now. So when it makes small dips below the 21, it's still okay, because it's still kind of respecting this band. And finding that support. So it's kind of giving confluence with the sequence levels in a way. Here broke above 4, went back to 3, and a band. Even here, giving confluence with 5 and a band. So that's how you can tie in the band. Here we had also pretty good number of candles not touching that band. Yeah, let's take a look at what Beverly is looking at. Let's see, you got in at 151.80. Let's see, 151.80. Nice. That was upon the break here. Good. Yeah, makes sense. Because we had, here was, we were looking at it, we had upside, and then correction, and you took it on the break. Yeah, very nice. Continuation, basically. Very nice. Are you, just out of curiosity, Beverly, which time frame are you trail stopping in? On a 50-minute chart, probably here would be good. Now, if you want to, obviously, it depends on, I mean, you can also go here, by the way, go below the band, below these bottoms. 30-minute chart. Oh yeah, that's the same spot actually. Yeah, it's the same level in fact. Makes sense. Yeah, very nice. So that's how you can use the band to get an idea about the trend, to get an idea about support and resistance, space between the band and about a reversal space by the band and the tunnel. Either if it's trending like this or if it's reversing. You could even use it for corrections. Put on like this against the trend. And what do you see? Well, typically you would see it go up to 2 or 3 because those are typically the correction moments, even 1, right? 1, 2, 3, that's where it corrects and often continues. So that would be used in a counter kind of intuitive way for potential turnaround levels. It's another way of using it. But we see in this case that it didn't get up to the third, it stopped at the second, and ultimately here the band too strong in pushing it lower. It didn't get that much of a leg up. That it didn't get that big of a pullback. Well, I think I really can. I think I almost said all details. Maybe I forgot 1 or 2, but for the moment, I think that's it. So wish you all good trading. Hope to see you in Dennis' webinar. Oh, that's a bit big. He's going to take a look at London Open trading system. Tomorrow, we're going to take a look at setting up your room and psychology perspective and how to plan trades and prepare for the trading day. If you have any questions on this material, let me know. Just send me an email to, let me write that down somewhere. Send them an email to here. You can do like this. Right there, you can see it, that email address. All right, if there are any questions that pop up later on. about this material or anything else. And well, wish you a good day and happy hunting. Cheers.